MD Investor channel. The channel where we're talking about personal finance, setting goals, achieving goals, educating ourselves and our children so we can break the cycle of generational poverty. Welcome to a new video. Today's video we're going to do is September 2020 dividends. Dividends for September 2020. These are monthly videos that we do showing the path of income we're getting from our M1 portfolio. Before we get into the video, there's people out there you think could benefit. Let them know about the MD Investor. Okay, we are a regular guy, not CPA or MBA, but we are motivated to drive path of cash flow to cover all of our expenses eventually, so we can buy back essentially our time. Okay, we right now trade our time for money. That's what you do when you work in a regular 9-to-5 job. You trade your time for money, and getting passive cash flow is one way to buy back your time. Almost like when the slaves after the Emancipation Proclamation, essentially you are buying back your time. I'm not a slave anymore, essentially. Okay, guys. On YouTube, it's MD Investor. On Instagram, it's MD Investor One. If there's people out there, friends, family, colleagues, that you think could benefit, let them know about the MD Investor. Okay? So let's get into it, guys. So the first, let me back up. We got 35 checks in the month of September. 35 checks in the month of September. First check we got was on September 1st from Aflac, the insurance company. We got $3.20. Aflac is a small position. Aflac is paying about 28 cents per quarter. They have about a 3% dividend yield. Obviously, we want to raise that position, but right now we are at $3.20, and we got paid on September 1st. September 1st, we also got paid from Pfizer. Pfizer is in the pharmaceutical space. We got paid $11.75 from Pfizer, and we got paid on September 1st. Our third check on September 1st was Wells Fargo, ticker symbol WFC. Wells Fargo paid us $65.27. Let's pause at Wells Fargo and go into the Seeking Alpha website. Let's go down to ticker symbol WFC, Wells Fargo. Okay, so here is Wells Fargo. So Wells Fargo is in the pharmaceutical space, financial space, a big bank. Right now it's trading at $23.19, which is at the 52-week lows, right? The 52-week lows anywhere between $22 was the low, and the high is about $54. So it's at the lows right now. So if you were going to buy, would be a good time to buy. You look at the PE ratio, it's 105, which is extremely high. We say PE ratio between 9 and say 19, it's considered fair value. Okay, over 100 is it's not a great value. Let's go to dividends. Wells Fargo is paying 10 cents per quarter. All right. The yield there is 6.93%, and you would think the 10 cents per quarter for the year should be 40 cents. The reason why this number is not 40 cents is because the first two quarters they paid 50 cents, actually 51 cents. 51 cents for first quarter, 51 cents for the second quarter. That gives you like $1.02. And now it's 10 cents now. Anyhow, what happens is we can go to the dividend history and you'll see what happens. Wells Fargo cut their dividends. Okay? So 2020, the first quarter, right? Wells Fargo paid 369.12, right? So March, June, September, and December. 51 cents in March, 51 cents in June, and now look, 10 cents in September. What happened? The federal government mandated that the big banks were not allowed to raise their dividends in the third quarter. They can maintain it, which most of them did. So the other big banks, so Chase, Citi, Bank of America, they maintained their dividend. Except for Wells Fargo, they cut it from 50 cents, 51 cents, to 10 cents. So more than 80% cut, which is a no-no in dividend investing world. So big cut. So because of this, I've decided I'm going to drop Wells Fargo. But the reason why I'm not going to drop it right now is because they're down. I bought it at about $28. per share. Now they're about $23. So I'm about $5 down per share. So I'm not going to sell it now. I'm going to wait till the price goes back up. Then I will absolutely sell it. That is very, you know, very bad in the dividend world. We can look at dividend growth. And you see the dividend were doing fine. Then they dropped it. 2009 through the Great Recession. Started building it back up. We're at 2019. So they don't have 2020 yet, but when they do 2020, you're going to see, again, it got dropped. So it appears that this bank is really not able to maintain themselves or maintain their dividends during harsh economic times, which we know are bound to recur every 10 years. I don't want to deal with that, so therefore I will drop Wells Fargo from my portfolio as soon as the share price rebounds. Okay, let's go back to M1. The reason why I wanted to mention that is because I say for dividend investing we normally buy and hold forever, but when facts change, your opinion can change, right? Facts change. They're no longer able to maintain the dividend, so my opinion can change. Now I will drop them. I'm not going to hold them forever. September 4th, we got paid by Honeywell, which is a big industrial company. They paid us $4.55. Definitely want to grow that position. Johnson & Johnson, the king, okay, of dividend investing. Johnson & Johnson paid us $26.75. We want to continue to grow that position. September 8th, Southern Company, which is a utility company. They paid us. It's divided here, but it's really one check. $5.63 and then $6.40. Same day, we got paid by Walmart, $2.54. The biggest retailer out there. Definitely want to continue to grow that stuff. Walmart has done well during the stay-at-home, sheltered-home pandemic situation, right? Because they have everything you need, right? You have the food and the clothes and the detergent. They had all that stuff, right? September 9th, Unilever. We got paid from Unilever, and you'll see it here, 6 cents, and then you see it here, $7.04. They are in their consumer package or consumer staple sector of the economy, compete with Procter & Gamble. So your soaps, your detergent, your toothpaste, all that stuff that you need. UPS paid us on September 9th, $6.63. Let's take a look at UPS. I don't know if we ever looked at UPS before. UPS, which you'd imagine is probably doing well, right? All the people ordering stuff on Amazon, it got to be delivered. You see your trucks everywhere. So $169 a share, which is close to their 52-week high. PE ratio is 23, so not really a great, not a great deal. The yield is 4%. Let's look at the dividends. So UPS is paying $1.01 per quarter. So $4.04 annual payout. The dividend yield is 2.4%. So not a great dividend yield. Probably because the share price really appreciated a lot. So 2.42% UPS. Payout ratio is good. It's good, only 57%. They've been growing the dividend for 11 years, and their 5-year growth rate is about 7.46%. So far, so good. And looking at the dividend growth, we do like what we see, right? Straight stairway to heaven, which is great. Okay, let's go back. To M1. So Archer Daniels Midlands also paid us again on September 9th, $8.53. That's a company involved in food manufacturing and processing, right? Again, a company that's going to do well regardless of whether the economy is good or bad. People have to eat regardless. Okay, September 10th, we got paid from Chevron. Chevron is in the energy sector, and we got paid $31 from Chevron. The energy sector is one of the sectors that's been hit hard, but they are maintaining their dividend. So Chevron paid us $31. ExxonMobil paid it the same day, also $41.82. And same day, IBM, September 10th, paid us $16.47 and $1.34. Microsoft paid us also on September 10th. So we got a lot of checks in on September 10th. Microsoft, $2.58. Target paid us $2.04. And again, $2.04, so that's $4.08. September 11th, we got paid from Dow Chemical. They paid us $27.40. Dow Chemical is in the material space. September 14th, we got paid from 3M. 3M paid us $14.40. 3M is a company that's diversified. They make pretty much everything. You know, you can think of 3M when you think of the Post-it notes. When you think of, they have those boards, those smart boards, or that whiteboard paper. They have those. They make the stethoscope, and they're in healthcare. I mean, they're in everything. So well diversified company. September 15th, we got paid. Tyson Foods paid us $4.88. Con Edison paid us on September 15th, also $7.11. That's in the utility sector. Everybody in the New York area know that you got to pay your Con Ed bill, right? So Con Ed also pays dividend investors. And this brings me to a point. Let me just add this. It's better to be an investor than a consumer. And I say that because when you are a customer of Con Edison, right, you're utilizing their energy for your lights, keep your refrigerator on and your microwave and all that stuff. You got to pay them for the service they provided. But as an investor, Con Ed pays me, right? So as a customer, I get service, but no money. As an investor, I get money. Okay. So that's a little aside. DuPont paid me on September 15th, $8.89. They're in the material space. McDonald's, everybody knows about McDonald's. They paid $3.89 on September 15th. Okay, let's go back. The next check was also on September 15th. McDonald's paid us again $6.25, right? McDonald's is in the, I guess, consumer discretionary space, right? We don't have to go there, but people enjoy going to McDonald's. It's convenient. They are a company that's been around for a while. They definitely have a great name recognition, a great moat in terms of like it's gonna be hard to come in and compete against McDonald's. Okay, let's look at McDonald's. I don't know if we've ever looked at McDonald's before. Let's look at McDonald's. Ticker symbol MCD. And even during the pandemic situation, people still go to McDonald's. They'll go to the drive-through or they'll walk in. You can't sit down in restaurants yet because I guess we're not allowed. But you go in, they get your food, they go out. So McDonald's is still doing well. $221 per share of McDonald's, right? The 52-week range. The low is $124. The high is $226. So we're kind of close to the highs. The PE ratio is 37, so you're not getting a great deal. Probably it'd be prudent to wait for a pullback or wait for the price to lower to pick up some shares of McDonald's. The dividend rate, they're paying you $5 a year, which is about $1.25 per quarter. And the yield is about 2%, 2.2%. It's $163 billion market cap, so it's a mega cap. Let's look at the dividends. So McDonald's is paying $1.25 per quarter, all right? $5 for the year, and the yield is 2.28%, so not a great yield. Their payout ratio is about 85%. They've been growing their dividends by 11 years, and the 5-year growth rate is 7.60%. Okay, let's look at the dividend growth. And from this, to look at this graph, that you see the dividends have been growing very, very, very well. They've been growing their dividend nicely, right? Nicely, very nicely. That's a company that you want to invest in. Like I said, the yield itself is not that great, but that's a company that's growing their dividends. Okay, let us go back to M1. Okay, so we got paid from McDonald's. September 15th, we also got paid from Next Era Energy. They paid us $8.97. That's it's a utility company. So involved in like natural gas and energy production. $8.97 they paid us. Realty income, which is a monthly payer, that's a REIT or REIT or a real estate investment trust. So what they do, realty income goes out and they basically go and they buy all this real estate. They then lease it back to the commercial tenants, so such as Dollar General, UPS, FedEx, and then they pay them rent and all this stuff. And from that cash flow, real income is able to give dividends to people like me. Okay, $8.40, and they're paid monthly. Okay, so that's something obviously I want to increase because most of these other companies are quarterly payers, right? So you're getting paid every 3 months, which is great, but our financial lives are on a month-to-month basis. So it's good if you get a nice check here, but that check has to last you for 3 months because you won't get paid for it for another 3 months. So it's really nice when you have a monthly payer that's coming in every month. Because when we work a regular job, we're used to getting paid regularly. Let's move on. September 15th, we got paid by Tyson Foods. They paid us 17 cents. Let us move on to the next day, September 16th. Duke Energy, which is a utility, they paid us looks like $20.15, right? So 85 cents here and $19.30. So you can see from my portfolio that I'm diversified within the sector. So in the energy or in the utility sector, you saw Con Ed, and now you see Duke Energy. You also saw Southern Company. Those are all utility. In the energy sector, you saw Chevron, and you also saw ExxonMobil. So you're diversified within a sector. September 17th, Home Depot paid us, and they paid us $15.66, right? So they did $15.02 and then 64 cents. September 21st, we got paid by Dominion Energy, which is another utility. So now you have Con Ed and Southern Company, Next Door Energy, and Dominion. I said another utility, $20.52. September 21st, Royal Dutch Shell, another energy company, right? So in addition to Chevron and ExxonMobil, I have Royal Dutch Shell, right? The big yellow sign when you go in to pull up your gas. Also, they got hit hard through this pandemic, but they're maintaining their dividend. Another energy play here, BP or British Petroleum, they paid me $18.70. September 29th, almost finished, guys. We come toward the end. September 29th, Shaw Communications, which is a telecommunication, the Canadian company, and they are also a monthly payer. All right, so Shaw Communications paid me $5.88. Same day, September 29th, I got paid Gilead Sciences. That's a big pharmaceutical company. So again, within the pharmaceutical space, I have Johnson & Johnson. I have Gilead now paying me $10.14. September 30th, the last day of September, we got paid from Lamar Advertising. That's a REIT or REIT. You see their signs on the highway, on the billboard. It says Lamar. They paid me $5.07. Public Storage, also a REIT, a real estate investment trust. You know them, that's a big orange sign. When you have too much junk in your house and you need to go put them in storage, think of Public Storage. They paid me $11.13. Let's take a look at Public Storage. Ticker symbol PSA. So Public Storage, ticker symbol PSA. $223.64 is what it's trading for. The 52-week low is about $155. 52-week high is about $249. So we're close to the highs. The yield, 3.59%. Okay. This FFO is funded from operation. They use fund from operation to evaluate REIT or real estate investment trust, as opposed to PE ratio that we normally do. They use funds from operations. Okay, and this is instead of the PE ratio, this is the price to fund from operation. This is like, I guess, would be equivalent to the PE ratio, 21. So maybe a little expensive. Let us go to dividends. So Public Storage is paying $2, and they're paying it every quarter per share, $2. Annual payout is $8. The yield is 3.59%, not bad. So $8 per year per share. Yield about 3.59%. The payout ratio is 77%. The 5-year growth rate 7.39%. So, this is a company to really hold on to and kind of see how it goes. I mean, they seem to be able to grow their dividend. Let us go back to M1, and we are coming to a close, guys. So last day of the month, September 30th, we got paid by Broadcom. That's in the business space, okay, or the technology space. Ticker symbol AVGO. I think they're involved in making like a semiconductors. Let's take a look at that. They paid us $21.90. They paid us $21.90. We're coming to a close. AVGO. So Broadcom, ticker symbol AVGO, trading at $365.28. Expensive stock, and they are at pretty much the highs, right? Because the 52-week low is $155. The high is $378. The PE ratio, 16. So we say that's a fair value. The yield is 3.57%. Let's take a look at the dividends for Broadcom. They're paying $3.25 per quarter. So $13 for the year. The yield is 3.57%. The payout ratio is low, 59%. 5-year growth rate, 55%. That's awesome. And they've been growing the dividend for 9 years. Let's look at dividend growth. Wow, look at this. I mean, look at how this dividend has been really, really growing. From 40 cents to 61 cents per year, 88 cents, $1.23, $1.64, $2.52, $4.81, $6.15, $11. This is growing awesome. We need to get more of Broadcom. That's excellent. Let us go back to M1. So those numbers are just astronomical. September 30th, last day of the month, long-term care, LTC, they paid us $3.49, also a monthly pay. Lamar Advertising, 17 cents, we saw it already. And the last company that paid us in the month of September was PepsiCo. They paid us $7.39. Let's take a look at PepsiCo, and then we'll do our total. PepsiCo, ticker symbol PEP. PepsiCo, ticker symbol PEP, trading at $139.06. Makers of all the sodas and like a Pepsi, Diet Pepsi, but also some food stuff, such as Quaker oatmeal and Frito-Lay brand of potato chips. They own that as well. The 52-week low, $101.42, and the 52-week high, $147. So they're kind of toward the highs. The PE ratio is 25, so it's not a great time to buy it because it's a little expensive. You can probably wait for the price to go down a little. Like it's great, it's up to the highs. The yield is 2.95%, so just under 3%. Let's take a look at the dividends. So they're paying about $1.02, paying it quarterly. For the year, $4.09. The yield is 2.95%. The payout ratio is 76%, and the 5-year growth rate 8.41%. Dividend yield, dividend growth 48%. Immigrants growing their dividends. So 2 more years, and Pepsi will be dividend kings. Let's look at the dividend growth. Again, it's beautiful. Continue to grow their dividends. They continue to grow their dividends. Okay, like the 5-year growth rate, 8.4%. Continue to grow their dividends. So that is excellent. So the total for the dividend in September 2020 from the 35 checks we received is $490.61. So $490.61 total dividends for September 2020. This represents pretty much the sum from all the companies. This represents money that we didn't have to work for. This represents a continuation of something we started in November of 2019. This shows us oxens at work. What do you mean? We did a video on, do you have oxens? And oxens are basically your workhorse. They're basically your workhorse, right? The Bible said, where there are no oxen, I think it's Proverbs 14:4. Where there are no oxen, the crib is clean. But from the strength of an ox brings an abundant increase. So that lets us know that we can't do everything ourselves, all right? We've been trained and told over and over again, study hard, get a good job, and go to work. But as we realize that that's not sustainable, that's really not smart. You gotta be honest, right? Mama and daddy and whoever told us, they were wrong. They did the best they could, but they were wrong. We look and see Trump paid no taxes, right? This money that we're earning here is not earned income. This would be filled out on line 3A on your 1040. Dividend income, and they will not tax you as earned income. So in many ways, this is just a win-win situation, right? You have to get started. You have to be deliberate. You have to be passionate. You got to be serious. You have to live below your means, and then you have to fund your account and buy assets. Again, MD Investor guys in the house. MD Investor again in the house, just kind of trying to motivate you, trying to encourage you. If there are people out there you think can benefit from this content, let them know about the MD Investor. We're going to continue to grow this portfolio until, like I said, it's enough to cover all of our expenses without having to work. Just remember, guys, the past is gone. We can't do anything about it. I wish I would have started this earlier. I wish I would have started 15 years ago. But my mind wasn't there, right? That's why we got to study and learn. Past is gone. Can't do nothing about it, but we can learn from it. The present is where we are right now, and we're going to plant seeds so we can enjoy an exceedingly and abundant harvest in the future for all our hard work under the sun, which is what God had promised us. Until then, God, till next time, continue to command your money to grow, and I will see you on the next one.